Good morning and welcome to Trading with Larry, our second episode. I want to thank everybody who's joining us today and giving us the trust to guide you through the day in the market. Our job is to really get everybody set up, to get you clued into market numbers that are out in the marketplace, earnings, and anything that we think will be market moving for the day. And I'm Larry Benedict, and I want to give you a little brief background on myself. I've been in the business. I know it doesn't look like it because I only look like I'm 40, but I've been in the market for 40 years. I started in 1984 on the floor of the CBOE and learned options from the ground up, which I think is really critical to becoming a great trader. I think everybody needs it in their arsenal. It's a great way to hedge your positions, to manage risk, and to make money. From there, I went to Spear Leeds and Kellogg in 1989, all on the trading floor. And I ran their index group and their hedge book in the mid 90s. And in 2000, we were bought by Goldman Sachs for $8.6 billion. And I went out and started my own hedge fund called Banyan Equity Management in 2000, global macro hedge fund with peak assets of just slightly over $1 billion. And then I was lucky enough to find a business where I was able to give my education, information, thought process, and risk management to the true public, people that really need it. And I started the Opportunistic Trader in 20 it really started in 2013, but it really got going in 2017, 2018. So we've been doing that for 7, 8 years now. And we've grown a market newsletter business that has become pretty substantial in the marketplace. And I'm joined by Thomas Maples behind me, an analyst for me, one of my head analysts. But the true head analyst who is going to be joining me every day on the show is Eric Shamilov. And Eric, I'm going to throw it to you. You can sort of go over your career, even though you only look 25. No, I'm only kidding. You can tell everybody a little bit about yourself, and then we can sort of parse, what's going on in the market today, Tuesday, off of a CPI print and a market rip on Monday. So I'll throw it to you for a second.
Yeah, we have a market rib here on the CPI, but I'll briefly discuss my background. You started trading right around when I was born, actually, which is interesting. And, I was born right when the WTI crude oil futures contract went live back in 1983. And, it kind of makes sense that I began my career as a commodities trader for for the family office of the vice chairman of Solomon Brothers, and I spent a few years there. Built a quant desk at a small New York hedge fund. Went independent, and then met you and met Thomas, and we became a pretty interesting team. We have a lot of fun together, and it's been great trading with you. I also run managed accounts for family offices, and we we exchange notes all day long, which is great. And yeah, so that's a little bit about me. Market is ripping here a little bit. Are we
Nah,
fading?
I wouldn't. I wouldn't. You're getting. Listen, anything green makes you happy. So the
Yes.
market. Like I felt like I watched the market a little bit overnight. Market was very, very weak. Not very. It had a humongous up day yesterday off of quote unquote. We're going to get into this, and it's actually got me a little bit angry this morning about a trade deal that wasn't. There's really no trade deal. And what's upsetting about this in a way is there is no potential talks for 3 to 4 weeks minimum. That's if they even come back to the table. So I don't know what they're gonna get out of this other than a reprieve off. So I'm again a little bit early. I got short in the afternoon yesterday. My levels, I believe, are okay here. I think, we talked a little on the air yesterday about the CPI number as sort of a throwaway number. I kind of thought they would show not a lot of inflation, but really, I think the mantra is in place.
It is a throw. I mean, the reaction on the CPI is de minimis. This is not a big reaction to the upside.
Well, I don't know how you say that when the Nasdaq was up 900 points yesterday and then was down like 50 this morning and ripped 150. I mean, to come back in, but I mean that, a natural move on a day over day, which probably Thomas can show you, is probably 100, average 100 Nasdaq points. So we did react to it. The market rejected off it. The market probably has some work to do. I'm I got to tell you, I'm not right on the move, but I'm very, very surprised at the move's extension here. You have NASDAQ traded above 21,000 and is trading above 21,000 on the futures. The low was 17,000. It's up 4,000 points on 17. That's over 20%. So I don't, maybe we overshot on the downside, but we are certainly overshooting on the upside. And the move has been extensive. And, you know, to write off inflation or write off anything that you're going to see in the near future is taking, in my mind, the market for granted. So I think today, the way I'm setting it up is I want to sell the opening a little bit more aggressively than I have in the past. That's for our S&P Trader or LSP, one of the products we have where we sell put and call spreads. I feel like selling near $15 to $20 out of the money spread on the opening might be the way to go. Maybe pick up $6, $7. Usually we pick up $2 to $3. But I feel a little more aggressive this morning. But we'll see where the market actually ends up opening. So we have, those trades don't come to our subscribers till 9:40 to 10 o'clock. We like to get them out early because that's when the market has the most premium. Looking at the move yesterday, I think it caught a lot of people off guard. And I think there were shorts leaning into the meeting, thinking that, it would be kind of a throwaway and they'd have to have a lot more meetings, which they actually do. But the market came away with the thought of a deal. So my question to you is, and I asked you yesterday, and I don't know if you came up with the answer overnight, is what is the deal? I understand they made the tariffs lower, they held back whatever, but from the White House themselves, Besant, etc., they're saying tariffs are still going to be intact on every deal they do, minimum of 10%, and this deal is going to be done at a much higher level. And then my question is, they came out originally and they said, they had productive talks, and then they threw in they had a deal. But again, China hasn't commented on this at all, and I haven't seen the deal. So I'm asking you, what's the deal? Like, what
Well,
is
other
really
than
substantive?
yeah, yeah, other than the tariff reduction, I don't think there's anything on the table yet. And I think the market was going into the meeting thinking that this is going to just be a meeting about a meeting. I don't think the market fully priced in the kind of reduction in tariffs that we got. Now, we got the reduction in tariffs, but after all these, let's say they do all these deals, Trump isn't going to uh, reduce these tariffs down to zero. I read somewhere that probably the average tariff rate from China is going to be somewhere around 50 to 60% before all is said and done.
Why would they
So
why would they sign that deal? Why do they want 50 or 60% tariffs? They don't have that now, right now at this moment. So
better
why would
than
they sign?
150%. right? Or
Well,
145%.
none of that. I mean, dude, that's like numbers in the air. I mean, anything above 30% or 20% is egregious. So those are numbers in the air. I just don't think. I don't
Right. So
think.
the market,
Well, you know what's
100%.
funny?
The market is getting ahead of
Let's
itself.
back up a little bit. Let's look at about 2 weeks ago when they asked Trump if he would take tariffs down or touch tariffs, and he said no way. So all of that no way went away in 1.5 weeks. So I think really,
Yeah.
we're taking more of the heat right now as a country. And again, I think that you think China's opening up, and you keep saying opening up, but what are they opening up?
Well,
They're
they better open
opening up
up.
their market.
That is that I think that is why the market is going up, is because they're expecting all these new avenues of growth into China, into the EU, into all these places. And if they don't deliver on that, then you're just stuck with the tariffs with no opening up.
Well, I don't
And the
think
market
the
is set up for a rude awakening.
I don't think the EU is going to negotiate when they have a 25% car tariff on them. What are they going to negotiate? There and now Trump said yesterday, which was shocking, that the EU is worse than China. I mean, I don't know, but we spent enough time really talking about that for the moment. But let's touch on markets again. We touched a little bit on S&Ps. They've gone up. Nasdaq to me looks like a pure short at this level. It's at it's trading probably a little below 21,000 now, but it's really had a sick move. I mean, this is from the crash low of 17,000. It may have traded below that. I don't know if Thomas can check that out on that Sunday night. But the 17,000 to 21,000 is 4,000 on 17. It's like 23%. I mean, they're pricing in better than perfection, and these levels are significantly higher than when they ever dreamed of tariffs. So I think the market's ahead of itself. I think there are good opportunities right here to either liquidate down some of your portfolio if you're long because you've gotten a second chance here, which I would take minimally by hedging, by using options, doing simple buy rights or buying puts to hedge the downside. Some strategies like that, or even liquidating part, if not most, of your position, because I do not think that the down move is over, and I think that the market is over exuberant about the headlines that have come out, which I don't feel are great. But I do think Sunday night into Monday, they caught people short. That's just what it looked like to me. S&P futures opened up 70 points overnight on Sunday night, which is a lot, but not what we ended up having, almost 200 points. And then they caught another leg with with the move up. And then at the end of the day, the market kind of looked like we get the look at institutional flow at the end of the day, marketing close imbalances, which used to work really well. They're still good to guide you a little bit into the close, but they can sometimes turn. And yesterday, it turned from a small sell into a big buy. And I think that gave us the extra 20 handles on the upside, which we probably, shouldn't have had. But here we sit. They had a positive reaction to a number that I believe is not all that important because, it's really putting in data that's not pure. I mean, you had oil prices probably in that number in the mid 50s. You had things that looked a little different than they look today.
Now,
Again,
do you think the April CPI number includes the effect of tariffs at all?
I maybe a front loaded part of it by having a lot of goods shipped
Because
in.
the mantra is tariffs are going to cause inflation, and this is April CPI.
Right.
We
Well,
we
I don't think tariffs were in these numbers per se as far as pricing. That's why I'm shocked we had such a big reaction. And it's funny, I feel like in a way, and maybe it's conspiracy theory, I feel like these numbers are like kind of leaked. Because like last night we should have traded down more. You had a weaker Europe off the opening and the market wouldn't downtick, and then all of a sudden the number shoots out and the market goes straight up. So again, as we say, the numbers are meaningful for the moment, but they're not really anything. No one's talking about the jobs number, no one's talking about pretty much anything. Bonds have had a slight uptick, and I mean slight, a couple of ticks. You would think they would perform a lot better than equities, considering they're at 445 on the yield. I still think higher yield is coming. I do think it's going to cause a problem moving forward. It's something that we need to watch. And I've told people out there, especially people that watch me, subscribers, when you're trading, definitely keep the 10-year note up on your screen, because that if that gets hit, equities at some point are going to sustain a bit of a loss. um, Overall, I'm looking at the moves like, if the market was really really good today, you would think the dollar would have strength, and it doesn't really have any strength today, which is surprising. Again, you bonds are up slightly across the board, barely, but you would think it would have a much more substantive move to the upside. So these are clues leading me to believe that the market has at minimum overshot a bit. Day is early. We haven't started yet, so you got to respect it. Again, we gave an idea in our LSP that we're going to sell a little bit more aggressively depending on where we open. Hopefully, the market can hold up and doesn't, you know, come in a lot. Sell, a near or at the money call spread and try to capture some real premium today, which is a more aggressive play for us. We don't do that all that often. Usually do that once a month or twice a month when we feel really convicted. I'm feeling a little bit convicted here that we're getting, such a move off a number that really isn't telling the true story. How could it? I mean, the prices of every good, I'm talking to a lot of my friends that own manufacturing businesses, and they're raising prices across the board on everything, and they're
yeah,
getting hit with
we
tariffs.
should see that in the CPI the next time around, right?
Right. So this is kind of a throwaway number as we see it. But overall, um, you got to look at the market's reaction, and the market is somehow positive after looking very, very weak or giving a little back. Um, the S&P had a crazy move yesterday. We had 3% moves, pretty much three and a half, four across the board. Those are outsized up days. So again, the market's got a lot of juice. It's still rallying, and you got to respect that move for the moment. But we think it should come off, and the market is too high for what's going on. And the shocking thing, maybe we talked about it a little bit. Maybe this is all about positioning. Maybe maybe the big guys, most of them were pretty bearish and are pretty bearish, and I think remain pretty bearish. And they've overshot because, like, think about this. We talked about it a little yesterday. The day of tariffs, we were at 5,500. The day before tariffs, we were at 5,700, 5,680. Okay. And now we're at, 5,900 or 5,870. We're hundreds of points higher. And I'm not understanding what the good is. I would have thought a month and a half into this trade situation, we would have more deals on the tape. I just think we roll back tariffs on everybody, and basically people are just sitting in their house, in their country, just waiting to get the call saying, "Hey, we're about to screw you. Make a deal or you're done." But right now, they're just kind of hiding out. Like, have you heard one thing about Canada? Like, why are
The
we
only
not?
the only deal that we have is the UK. That is the only one so
And that's a
far.
non-comprehensive deal. If you read the deal, it's not fully comprehensive. It's not a signed, solidified 100% deal. So they have something done with them, but it's not a deal. But my thought is, wouldn't you want to make a deal with Canada? They're your biggest trading and closest trading partner. They're, he wants it to be the 51st state or whatever. Why are we not making a deal there? Why are we so concerned? I mean, I know the answer. I'm going to ask it to you, and I'm going to see what your answer is. I know my answer, but why are we so concerned with making a deal with China? They're literally worlds away from us. Worlds. Like it takes 16 hours to fly there, minimum, maybe 19, and they're a
Well,
world away. They're a world away. And my thought is, I'm not even going to let you answer it. I'll give it to you after I answer it. So I'll give you a hint. My thought is for the last 40 to 50 years minimally, we have set up a scenario where all of our products are made there. Everything, all manufacturing is done
right.
basically in Asia. Okay. Donald Trump, in a week or 2 weeks, wants to basically change that. And he's been told by his people now, you can't do that because no one can build the factory that fast and just take the tariffs off. So the bottom line is, my thought is, he wants to undo something that's been going on for a very efficiently, I might add, for 60 years, and have them have a factory in Arkansas making, you know, children's plastic toys. Okay. Hey, how can they do it? I just don't know how they can compete. You have labor. It's all about labor, right? It's all about what you can get the worker to work for.
Yeah.
So my thought to you is, what are we trying to do? Like, I know he's trying to get manufacturing back here. Okay. He wants 80 Apple manufacturing plants all over the country. I mean, I don't know how many jobs that's going to give you and other companies, but they can't do it because the workers don't work. First of all, they don't work efficiently. Okay. They are not trained in a culture that is trained to basically work and have, full pride in the work. And
Oh, are you calling us Americans lazy?
no, I'm just saying we're a different kind of worker. We're more, I would say we're more entrepreneurial. We want to do what we want. And again, listen, I'm not talking about a guy potentially my age. I'm talking about like my kids coming out. I have all my kids are in the 30s and 20s, and it's a different. They all want to be multimillionaires in an hour. So I just don't see how this is the answer. And then when you say to me they're going to
Well,
open
that's
up
the point.
to do
I
what?
look. I think the
To
market is
buy
going
what?
up here because they're starting to factor in the potential growth opportunities from all these deals, and if there's no opening up, the market is due for kind of a rude awakening.
Well,
So
when you say opening up, what is the opening up? So we have the one side we just talked about where
I'll
goods,
tell you one
goods
sector,
are
for instance.
goods. Time
I was
out.
actually a little bit disappointed from the news in China. One sector in particular that I'm looking at to be opened up is energy, LNG, liquefied natural gas. China's a big importer of that. We have plenty of it. We have a lot of capacity. So I'm looking for news in that regard.
Yeah,
And
but you
so
know
far,
that
we haven't heard
Russia,
anything. That's just
you
one example. You have defense spending. You have look. I mean, look at Boeing stock, right?
wait a
It's been
second.
going.
Time out. Time out. We want to have this defense spending with them. We want to start supplying them with all our stuff.
I'm
That would
not
be
saying
a
particularly
humongous mistake.
defense
Humongous.
spending. With China, it would be more energy.
I just
Probably.
don't see the opening up. I think what this is all about is Trump is pissed off that they're manufacturing every product that we get in their country. And it doesn't even matter about the tariffs. He wants it back here. He wants Apple to make all their phones here. I mean, you think that they're going to be able to do that with minimum wage triple what it is in China?
Some things yes, but I don't know about the iPhone. That that you might be right about. That might be.
Okay, well, let's talk about Nike and making shoes. Okay,
Which, by
the
the way, Nike
factories
had a big day
themselves,
yesterday.
Eric, the factories are going to cost a fortune. The land is going to cost a fortune, and the labor is going to cost a fortune. So there's not a lot of skinny in these manufacturing products. So it's a long story. And again, Trump only has 3.5 years of really active duty left. It's not a lot of time. My next door neighbor is building a house, and it's going to take 3 years to build this house. Over. They're shooting for three, but it may be more. So I don't know what kind of factories they're putting up in short order to really take care of this. So, listen, this is early days. This is a spin in the game. The spin has been to the positive side. The market has taken a meeting that really not a lot came out of it other than that they're going to meet again and they reduce the tariffs down to an unsustainable level. And I believe that meeting is not happening that fast. I mean, you would think you would see China all over the tape. Why are you not seeing anything from them? Nothing.
Yeah, it was funny when we talked about that yesterday. I think we used we used Chat GPT to put in any important quotes from the Chinese officials. There was basically nothing. So
Yeah.
you're
I
right
mean,
about
listen, I think that
all
this.
the cheerleading has been coming from our side, pretty much, is what you're saying.
Well, I think we discussed this as well. I think we called the meeting. I think China walked out of the meeting early days Saturday.
Yeah,
We
they were
gave
happy to
them.
be in that meeting too. You're saying that they're not feeling any pain. You have protests there. You have idle factories.
I don't.
They're not coming out of this unscathed either.
You're not hurt. Listen to me. The only thing that matters to the United States consumer is the U.S. equity market. And when that thing tanked, all hell broke loose. Okay. Everybody couldn't retire. I got
Equity
50
is
calls.
only important for people that have big portfolios.
That is not true. Everybody's in the market in some fashion, whether it be $5,000 or 50 million or 500 million. I mean, what do you mean? Everybody is in the market, every single person, unless you're, you know, somewhere. I don't know. I mean, why would you not have money in the market? Even if you had, my kids have money in the market and they just started working, they have 401ks. Anybody that has a job has a significant position in the market, and people that are my age and even older are relying on that for retirement. So when you get slashed 25% in 2 weeks, you're panicking. And that's what happened. And that happened to our subscribers. And I'm glad the markets have come back. And I'm hoping that people out there are smart enough to reduce down risk, especially if you're close to retirement. Get positions under control so that you have the ability to sustain the next thing that is going to happen. And then we're clearly not out of the woods. So, you know, let's touch on, we touched on U.S. equities. We
I
gave
want to
everybody.
just ask you a question. Where I agree with you, we're not out of the woods. I agree 100% that the market is ultra exuberant about headlines with no meat on the bone to them yet, right? So, how do you play this? Is this dropping today, this week? Is there
Here,
a little bit
here's
of
how,
buy?
here's exactly, this is exactly how I would play it. Okay. I'm going to give you sort of, and listen, in full disclosure,
Write this down, okay? Okay.
the playbook is ever changing. So, it can change on a dime. We're traders, we watch the market. But my playbook here, again, if you're a little bit longer term investor and you're a little bit overexposed, I would lighten up that exposure. If you're looking to add, income, and trade with us at the opportunistic trader amongst our multiple products, I am short. We're short a little bit too early. Again, I've said this ad nauseum. We trade options. We have defined risks. So if you buy one contract for $300, no matter what, even in this up move where they, sort of ripped everyone's face off, we lost, but we didn't lose a lot. Okay. And we're still able to stay in those positions. So I would kind of trade in that way. But my thought is, again, we're slightly short. We have, no one who's short has good location, obviously, if the market went up 4% yesterday, unless you sold it yesterday. So our location isn't great. I think volatility is too low and will pick up. And I have yet to average the trade, which we don't like to do. We like to average winners. Okay, that's something that I'll get into as we get deeper into these podcasts over time. But I like to average into winning trades and get bigger when we're making money. So I don't like to average, and I rarely ever do it. But for me here, I'm looking for like a reversal today, a weaker market, and get a little bit sloppier, and then I'll add to the positions. But right now, we're sitting tight in our positions. But again, I want to be clear, if you've been long and you've gotten hurt here, you need and owe it to yourself to get yourself in a position where you lighten up a bit. And, that's what I'm doing with my own portfolio. That's not really a trading portfolio. So that's sort of what I want to leave everybody with the
Yeah,
roadmap.
I guess my question is, we had what was it, like a 3% gap up in the S&P yesterday. Do you think that gap is safe for this week? And I ask you for myself because the position I'm planning to do is to sell puts down there and also get really aggressive on call spreads about 100 points up from here. Do you think that gap holds this week?
I don't know, but if you think the market's not going up, why are you going to sell a put spread?
Well, I just think, I'm kind of angling for
Well,
frustration
what
on.
what is it? What is your gap level? 200 points lower than here? I don't think we're going down 200 points. We may, but
No, I think like 100 points in either direction.
oh,
For
I would not touch, dude. That's an everyday, dude. That's, what's funny for people.
here with
This is our
volatility,
first couple of
like
shows,
it
so
was,
they
I think
don't
we're
know you that well. So I'm gonna throw you out. Here's Eric. It's an iron condor kind of day, which means you're
hey,
selling
yesterday
both the
was
put and call,
exactly that.
and that trade has
From,
not worked in.
from the open, it was exactly that. It was an iron condor kind of day.
No, it
You
wasn't.
sell call spreads, you're
We
making money.
we we lost on our call spread. Max loss yesterday. Okay. The market rallied $75 from the opening to the high. So, we were selling call spread out of the money by $50 and they ramped it on the close and we lost money. The trades have been very difficult and hard to come by. And, for our audience out there, I know it's a lot, we may have some institutional people picking this up. But a lot of our audience is retail oriented and looking for ideas. And listen, it's a tried and true strategy that works over time, but it has definitely been choppy. We've been positive and negative on this strategy at least 10 times this year. I would tell you that we've been running this strategy since 18. For this product, I've been running it for over 30 years. And the bottom line is that that strategy has not had a losing year yet. So
Yeah, I've
if
seen
you
you
stick
come out
with
of
it, it works. But
it. I will be
I think,
confident in that strategy if I'm your subscriber and just
but I
keep.
think you're disregarding the market moves. I mean, you don't think we can go down 100 SPU points today? I mean, probably not, but you never know from here. Easily we could. I mean, listen, what we tracked a little bit yesterday is volumes, which I look at a lot in our trading. And the volume on the E-mini S&P is very light on this up move. It's about 1,300,000 a day average over the whole up move, which is light. On the down move, we averaged over 2.6. So we've averaged double. There's always more volume on the downside, but we've averaged double on the downside. So, it leaves a lot of these things leave me leery. Like yesterday, I would have thought we would have done 3-4 million e-minis up 200 handles, and we did 1.6, which is lower than the average when we were going down. So, they've been able to take the market up. on light stuff. Again, the market is still in bid mode, so you have to just be careful. It just does not want to go down. I don't know why. It's very, very interesting. Obviously, for traders, having market volatility is a gift. Unfortunately, when we have 50 vol like we did and 60 vol when we were going down, that's never sustainable ever because no one can handle it. So basically, they rein it in, and as the market starts to rally, they crush the volatility. So volatility is under 20. Um, Everybody thinks we're safe. I haven't seen one comprehensive trade deal yet. It's been a month and a half. Um, I'm waiting for it. I know, the deal with the UK is whatever, but, I read that it's not comprehensive across the board for everything they're looking at. So there's going to be a revisit there. And I would think, judging from the China deal in 2018, these deals are going to take time to do across the board to be real. And, I don't know what it really is. I think Trump wants tariffs. So I think he
Yeah.
needs them and he wants them. And I don't think, the
Yeah,
deals are going
the
to be.
market's definitely acting like tariffs are at 0%, right? But
I
it
think
could be
they're
a
acting at
market where
tariff.
it
I think
frustrates
they're
the
acting
good
tariff.
for a little while.
I think they're acting at tariffs are below zero. Think about it. No, literally, we're higher than when they ever announced tariffs. So they're acting like they're below zero. They're acting like it's
Right, because levels are
unbelievable.
above Liberation Day, right? That's why you're saying.
Yeah. So, that sort of covers that. I'm trying to get through all these markets. So we have the
I'm
equities kind of
curious to know what
covered.
you think about the dollar and Forex.
Well, I think the dollar is going to weaken up again. Dollar move this year against the euro was basically 103 on the low, 116 on the high when the world was ending, which was only about 2 weeks ago when the world was actually ending in the middle of the day. And these currencies, the dollar got annihilated. The yen got down to 139, 138. The euro got up to 116, and the British pound got almost to 140. So I think we're mid range on the year. They're waiting for the next move, but I do think the next move is dollar weakness again. I, you know, I don't have faith that Trump will not throw a wild card into the market with either some country or with China. So you have to watch that. So my position is actually long the euro against the USD. On the second go round here, we're up a little bit on the trade, but we think that trade could trade back to 113, 114 because this is the best it's doing and the market's ripped 25%. So something's wrong. We talked about it a little last night off the air. Like for the price of where the E-mini S&P is, this thing should be at 106, 105. So I don't know why it's at 111, but it's at 111 for a reason. So the dollar never came back. Bond prices never came back. Okay. You would think that yields would be lower, right? I mean, that's the traditional thing that
Yeah,
makes
that was a
equity
big question mark for me yesterday as well. Why are rates up?
because there's problems in the market. You have like today's number is fake. I hate to say it because a lot of the numbers are fake, and we were
They're
calling
all
and
they're
we were
all fake
calling
and they're all late.
well, no, we're calling the jobless numbers not real, all of the Biden administration, and they came out the same every single Thursday for like 20 weeks in a row. So I don't know how they could be exactly the same, but they were. So I don't think the inflation that we're going to see has hit the market yet. It's going to probably hit the market next month or the month after it. I don't know how heavy it's going to be, but when you ask about the dollar, that's my position long euro. I think it trades to 113. It's trading at 111 and a half. So I think that trade could work here. I would look to short the yen against the dollar 149. That works. But looking at the bond market, like it can't even stay up. It's horrendous. It's not, it's
Up a
not
little
even.
bit, right? A little bit.
What's up a little bit? I don't,
Not
the
here, but
bond's not up. The bond isn't up. I mean, I don't know. The 10-year is kind of flat. I don't know. I don't see anything up, but
you know what I know? The euro has really gotten hit, but the British pound has kind of stayed up there. Do you think there's a cross currency play? Long euro, short.
well, I think that the British pound and the euro are kind of in line. 132 versus 112, 111. I think that's kind of in line to the way it's been moving against the dollar. So I don't see anything in that trade. I know you love to do these crazy pair trades, so it's probably right up your alley.
Yeah,
Um,
I mean, take a
so
look at this chart. This is Euro GBP over the last month. It's a pretty good hit. Maybe a little reversion on this trade. What do you think?
yeah, I mean, listen, I could play for it. I just see a little bit more clearly you know what what I see is that bond yields want to go higher for whatever reason. Um, the only thing I'll say about that trade is it's a crowded trade. I mean, people are playing for that. They're playing for an unwind of this carry trade that they have on that sort of unwound a couple of months ago. Um, but overall, we've covered equities, we've covered bonds, we've covered currencies. So let's throw it over to crude oil, which is up around 63 again, a level that it rejected yesterday. You said Trump's going to the Middle East. I don't know when or if that's happened. Is he
He's going
going?
to get a little
Wait,
bit of announcement of more, chip allowing them to buy more of our chips. Maybe that's why Nvidia is up a
let
percent
me
and a
ask you
half.
how good it is. Let me ask you, did Qatar give you a plane?
No, no, they gave me a koi plane.
And then the best is Trump comes out and he says he compares it to Sam Snead picking up a putt, right? Taking the free putt. So when you're on the golf course, there's a gimme. It's like golf etiquette. They say, "Oh, you're close enough, pick up your ball." And some people are like, "Oh, no, no, I'll putt it in." And Trump's like, "I would never putt it in. I'm picking up my ball." He goes, "Why would I? Why would I give anyone a chance?" So he was comparing the plane somehow to that. Okay, so he got gifted a plane that he's
From Qatar.
replacing.
Yeah, from
He's
Qatar of all countries.
right. Well, he's replacing Air Force One with it, which is unbelievable in itself. But no one's really talking about that. So that
I don't like that. I
that
think Air
that's
Force One should be
that's the flavor there. So
very.
maybe they're gonna hand us free crude oil too. So maybe he'll get the price back down.
You know
But
what?
right
We don't need their crude oil. We don't need their crude oil. We have a
now,
lot of energy resources here, and
so then why is crude 65 a barrel?
well, because
64 a barrel?
they produce just as much as we do,
I
and
understand, but
supply.
I'm asking you if they're opening up and OPEC is giving us more oil and whatever, and Trump literally touts oil on at least a biweekly basis of how cheap gasoline is. Why would he be happy that oil is back to $64 a barrel, which is kind of the highest level since he took presidency? So maybe we'll get some squawking about that, how unfair it is that, whatever, country isn't doing whatever and they're gonna, put tariffs on them. So, keep an eye on crude. It looks like it wants to break out. I don't have a trade there.
Yeah,
I
me
bought
neither. I
I
don't see
bought a
any.
little gold for the first time. I'm not feeling great
My
about
God,
it.
we're on the same side of a trade. That makes me so nervous.
What are you talking about? I'm only renting it, dude. You own it and you'll never get out. I'm renting this trade. I'm hoping to get a 50 to handle up move in gold or 70 and then I'm punting it. I'm just
Well,
not
you
feeling
had some of that early this morning. I mean, the thing was up. What? It was on the
30.
cash.
It was up 30.
30. Okay, 30.
Mm.
It didn't crash on the CPI. It's holding yesterday's close so far.
I would just say it looks yuck. doesn't look good.
Yeah.
So I hope I get a little bit of an up move, but in full disclosure, we have a short S&P position, a short Q position, a long gold position, a short Bitcoin, and MSTR positions. Um, we're holding on to those. I'm not in love with any of those positions. I gotta look to either roll or make moves. So we covered gold and
I have a
Bitcoin's up.
question for you. I have a question for you. So Coinbase last night, they announced they're going to be part of the S&P 500,
Mhm.
replacing Discover Financial. In your experience, what do the stock is up 10% pre-market. Is this a fade? If you're long, do you get out? Well, what's your experience with stocks entering the S&P 500?
No, I like the name. I think the name. I listen. I'm long Kraken, which is a private company that I hope goes public, which is a competitor to Coinbase, and I think they both can operate very efficiently in this market. So I would not, I'm not touching that to the short side. But we're getting long in the podcast, so basically, I've tried to go over every market. We've covered pretty much everything. We had, what I'd like to do in our next couple of podcasts is cover individual equities. So we'll get to that when we can. That being said, I want to wrap. I'll throw it to you. You can close us out. I think I covered pretty much everything, positions, thought process, etc. So I'll throw it to you for your words of wisdom for
Oh
our
boy,
clientele.
um, it's an iron condor kind of day, Larry.
Ay, ay, ay. All right.
Yeah,
Listen, I'm cutting you right now. This is a brand new podcast. You've killed people with
I'm
this.
going to go on both
Um,
sides today. That's what I think.
listen, I think, I know you like to do iron condors. To me, in this strategy. We have this in our S&P trader strategy, LSP code, but we pick a side. I don't want to go in with a straight iron condor. I want to be positioned to the side that I think the market is going to move for the day. Then, if it doesn't move the way we think, then we may enter the iron condor to
Right.
collect more premium on the other side. But listen, I want to wrap. I don't know if it's an iron condor kind of day. Eric is smiling. There's no smiling in trading. Okay, I'm just letting you know. There's
This is
only
a podcast.
crying. There's
We're
only
not really
crying and
trading.
anger.
It would be
Okay.
great if you and
There's
I were
no.
actually
It's
trading
no.
on the
You and Thomas behind me can celebrate all day long, and
What's up,
we'll,
Thomas?
we have a sand pit here.
How
We
you
have a
doing?
ball
Is he
pit over
treating
there.
you
You
okay?
can't see
Is
it.
he treating? Is he physically abusing you or what? I know he's emotionally abusing you, but is he physically
Okay,
abusing you?
wait. We're gonna leave you with this since you're an iron condor kind of guy. The
Oh my God,
volatility, the
an iron
volatility.
condor kind of guy.
All right. All right, Mr. Happy. It's 13 volatility. Okay. You want to sell 13 volatility implied for the day and a $30 straddle? Good luck. I'm leaving it with that. Everybody have a great trading day. Be careful, pick a side. Both sides will not work with $30 today. Everybody have a great day and good luck trading.